Hi. Hi guys, this is my very first YouTube channel. I just wanted to talk to you guys about the advantages and disadvantages of different corporations that you can set up if you're setting up your own small business. So we're going to go over the all of these different type of corporations and which one would be the best, which one you think would be best for you. So the first corporation that a lot of companies like to set up is, as they're just starting out, they're going to be thinking about setting up a sole proprietorship. This is literally just like, hey, I have an idea. I want to sell this product. I want to sell this toy. I want to sell this toy off of eBay, anything like this. A lot of these corporations we call as sole proprietorships. The biggest advantages of sole proprietorship that it's very, very simple. You don't need to set up a new corporation. You just run as a DBA, which is doing business as that name. This type of situation is best if there are no employees. There's very low startup cost for this. And it's easily to sell the corporation because you're like, okay, this is my product, this is my thing, here you go. And I just will take the money also of it. And the biggest disadvantages for sole proprietorship is that it has an unlimited liability. You're doing a business, and let's say you own a home. And if you own that home, and let's say you did something wrong accidentally, and you're getting sued, well, they can take your home, they can take your car, they can take all those things because your company is you. So you basically have all of it. So there's some trouble. That is a biggest problem. Also, there's trouble raising capital from a bank. Banks usually will normally loan to an LLC or a corporation or an S corp, but not just a sole proprietorship because they're just like counting your money. You might be able to get a loan, just say getting a personal line on your credit or a mortgage loan, but it's not a loan for the business itself. So again, you're still a lot more liability on that side. And it's also going to be very hard to grow because eventually, you guys, everybody wants to have employees, so we can grow up. Well, a lot of people want to grow their company and they want to have employees so they can actually get bigger and be able to make more revenue and more income for them and the family. But with the sole proprietorship, it's going to be harder for you to like hire employees. Well, the next one that is another type of company that you can set up is a corporation. It's like a normal corporation, like the big corporations can be the big ones like IKEA, you know, Coke. All of these are large corporations, but also there could be small corporations, small businesses. These have advantages because they have limited liabilities, such as this. So if the company gets sued, they're not going to go after your house. So that's going to be a big part. Another great advantage of a corporation, it has a new flat tax rate of 21%. That is very low, and that's so it's a new tax rate. It's going to go on until 2025. So it started in 2019 and it's 2018, I'm sorry, and it's going continually on till 2025. After that, we're not sure what the percentage is going to be, but so if you're thinking for those 4 or 5 years, it's going to be very useful. Also, the great advantage is if you're a sole business owner and you should have health insurance, I still recommend everybody should have health insurance, is that you can actually use the health insurance cost as a deduction for your company. Because you're an employee of the company and you can actually put those health insurance as a cost to the company. So that will reduce your income so you don't have to tax as high. Another large advantage is that it's easily transferable. Like you have the corporation, and you're like, well, I want to sell it. I want to sell it to my friend John or Samantha, and you can easily sell it by selling off the stocks and those. Now, there are some large disadvantages for this, is that there's double taxation. Well, how it works in the double taxation is that the corporation is taxed, and then you are taxed. And so if you're taking money out of that, then you're also going to be taxed as an income to yourself. So you're going to be hit from one side, the other side. That can be avoided by giving yourself a bonus. And but the thing is that bonus needs to be given to you before the end of year. So you need to plan this out to make sure to plan this out so you don't have to do this. So it requires planning with your CPA and things like that. Another big disadvantage is there's a lot of paperwork for a corporation. You're gonna have to have stockholder meetings, elect a board, corporate minutes. It's weird to have a corporate disadvantage like a corporation with minutes with just one person or maybe two people. You're like, okay. But you need to have these documented and you need to keep these in your files. So if anybody comes asking, you have the documentation. Also, another big disadvantage, especially for small business owners, especially like startups, is that you're going to have losses in your first year or two, right? It's just the way business works. People do have losses. And you want those losses flow through your stockholder. But with a corporation, it doesn't flow that way. So a corporation, the losses do not flow to the stockholder. The company loses money. It doesn't mean that you get to write off some of your income. Maybe you're having your wife has a job or your husband has a job, and you want to reduce the overall income, but it doesn't flow through that way. So overall, I would recommend, for a small business owner, I would recommend a corporation. I would recommend an LLC taxes and an S corp, but we'll discuss that further down. Okay. Now, this is the one that I believe is the best. It's what we call the LLC corporation. There's a lot of advantages for this corporation. It has a limited liability, and this limited liability is really great. It's like the corporation is working, and it's just not flowing through. It's just not, something happens and then they sue. And it's only going to sue the LLC. It's not going to sue your home unless you're doing something really, really wrong, like fraud, then those things are completely different. But generically, business situations, it's going to go through a limited liability. Another great thing is that if you have four members in your family. Let's say you have like you move to the United States and you're a citizen or a U.S. resident, but your mother or father or sister or brother they're in another country. Um, we can go in another country and you want to be part of that business. Well, LLC you can have foreign members into it. Also, there's no double taxes. I mean, there's no the double taxation like corporation does, right? So it'll flow through. So, and when you do your income tax, your income will just flow through your company. So that's a big problem. Also, if you want to get a higher basis, like if you have losses, you can't have losses higher than your basis in the business, right? So whatever you invest into the company, you can't just that's your basis into the business. You can't have more losses than your basis. So the thing is with this is that if you have debt, you're actually going to increase your basis. Let's say you get a loan, you're going to increase your basis into the business. That's not the case for corporations. So, and it's easier to operate. There's no need for formal meeting minutes, and that's a good portion. Now, the thing is, another big advantage with LLC, if you're setting it up, you can actually be taxed as an S corp. There's a particular IRS form. I don't know it particularly right now. It's like a 6256, I believe. I could be wrong, but yes, though the S corp you can be taxed as an LLC through if you can be taxed as an S corp if you're an LLC. So, and then you still have to go through the other disadvantages. We'll go over the S corporations in a minute. Now, here's the other big disadvantages to LLC. There's you have no savings on Social Security. When you have a S corp or corporation, you can figure out a way to reduce your Social Security and your basically called the self-employment taxes. So there's another one is that some states require it to be terminated within 30 years or less. So I recommend researching your state and find out how many years can that LLC last. And another thing is some states they require at least like two members of an LLC. So you have to have a partner. It's fine if you have a husband and wife, but suppose you're an individual owner, you're a sole proprietor, or sole owner of this business. You're like, well, I don't want to give somebody else the board member, their partner, because it's just not the best way to go. So that's another item. So here's the one that I think is the best, is what we call the S corporations. And there's so many advantages to the S corporations. It does require a little work, but there's just the biggest part is reduction of self-employment taxes. And as I started out the tax business, I was like reading over it, I was like, so this is the way you can actually save money and people have their own business. So, and that's why everybody here is watching this channel. So you can actually, if you are an LLC, you can be taxed as an S corp. There's a form you fill out and you can just easily go through it and you can be taxed as S corp. So all the income and losses actually will flow to the stockholders, right? So you had some losses, or you had some income, and it'll just flow to your stockholders. So it makes it easier. And you don't have to deal with the tax planning, right? You don't have that double taxation like as a corporation, so you need to figure out the bonuses. So there's none of that. And as I was mentioning earlier, there are savings on self-employment taxes. Let's say you're running a business. Let's say, can I say, like a trucking business? A trucker, throwing out a number, gets paid $50,000 a year, right? And on a normal salary. And if you set up as an S corp, you pay yourself a normal salary. But if you're making more money on the corporation, you that could be just taxed as a normal. But you have to be set up as your normal salary. So if you're making larger money, you don't have to pay the self-employment taxes. That's just the income from the business. So that's the best way to go. The other great advantage of S corp is that's limited liability, and if you can tell, it's like that's a big thing involved these corporations that they all you need to offer the limited liability, except for the sole proprietor. So I recommend going through this limited liability, and the losses will be only amount of basis of your company. Now there are some disadvantages. There can only be fewer than 100 stockholders, which as you're a small business owner, it's probably not that big of a deal. All stocks must be owned as a U.S. citizen or a U.S. resident. So if you are an LLC and you have foreign owners, you can't receive tax as an S corp. But if you don't, if you're just everybody is a U.S. citizen, a U.S. resident, you can easily just set it up that way. There's also only one class of stock. There's not if you have different classes. Let's say somebody is just a limited partner and you just want them. Everybody has the same class of stock. You can have different percentages, but they all have to be a same class. The corporation debts don't increase the your basis of your company. So why the basis is so important is that you can only write off the losses of what's basis of the company. So if you have an S corp, you can't write you off on that amount. There are also limited medical benefit deductions. That goes in a little bit more detail, and it also goes with the Obamacare and things like that. The other large disadvantage is that you're going to have to keep up with a lot of documentation, such as board minutes, stockholder meetings, directors. And I would work with your CPA. If you're a small business owner, it's easy to create. It's write down, sign it, and just do it on a monthly basis or even a quarterly basis. But you can even get your CPA to help you write it out and just make a template so you can easily keep through this. So these are overall my thoughts is that if you're a new business owner, set yourself up as an LLC. You can easily do it online. I mean, I had a friend of mine who did it on his phone within 10 to 15 minutes. So go ahead and set up through a LLC. And then when you come through making your money and try to figure out how you want to be taxed and all of these things and because of how much money you're making, you can go through the S corporation. I would recommend working with a CPA and talk to them and how to go through it. So if you do like this video, I recommend click like and subscribe. And if you have any more questions, I am a CPA based in Houston, Texas. You can give me a call. My information and my website is down below. So thank you very much. And if you have any questions, send me a text on the chat and I'll answer it.